US markets continued with their losing streak. That's for the third consecutive day. Factors keeping market players busy, including the third quarter corporate earnings season, as well as speculation around whether the Fed will cut rates further or hold tight at its next meeting. The Dow Jones Industrial Average ended the session down 0.95%. The S&P 500 declined by 0.92%, while the Nasdaq Composite Index finished 1.6% in the red. Locally, the JSE is higher, with the all-share index trading 0.7% firmer. The rand is trading at 17.69 against the US dollar, 22.95 vis-a-vis the British pound, and 19.11 against the euro. Looking at commodities, gold is trading at $2,737 an ounce, platinum at $1,051 an ounce, while the price of Brent crude oil is trading at $76.37 a barrel. All right, to unpack the markets for us, I'm joined by Lindile Malgas. He's an investment strategist at ABSA. Thank you very much, Lindile, for joining us. So what, from your vantage point, are really moving the markets currently?
Yes, so we are seeing some of the current drivers of our markets being the intensifying global tensions in the Middle East. That does have an impact on the oil prices. If you're looking at the price movement over the week, it's up about 4%, as well as gold prices, those hovering above the 2,700 mark. We are also approaching the elections in the US, so quite a lot of uncertainty on who will emerge victorious there. And that has also driven a lot of sentiment globally. And then lastly, we are currently in the third quarter earnings season. About a third of the companies have reported so far, and that does also continue to drive volatility within markets.
Yeah. So the BRICS summit does continue, but there was the release of the Kazan Declaration, wherein now it's encouraging BRICS countries to use their own currencies in financial transactions. And there's also talk of a BRICS grain exchange. What did you make of some of the commitments that came out of the summit, and what sort of impact will any of this have on the US dollar?
Yes, so certainly the talk around countries using their own currency is not new to markets. We did see some mention of this at the 2023 summit that was held in South Africa. But the main aim is to diversify away from the dollar and also reduce currency volatility for some of the member states. And also from a funding point of view, ease the access to funding and also reduce the trade barriers between some of the countries. And then on the grain exchange, we think that some of the BRICS countries do face similar challenges, and the introduction of a grain exchange may help in stabilizing food security. And they also have the view to expand this to further commodities as well. And then look at the impact on the dollar. We think it will have an impact on the dollar, certainly, but we still believe that the dollar will retain its dominance in the short term.
And then just looking at a couple of stocks, the Clicks Group, they released their full-year results. They're talking about, just for the year ended August, they talk about profits rising by 14.3%. Clicks always seems to be quite resilient, regardless of what's happening. What are your thoughts about this particular stock, and how have they done?
Yes, so we saw the results being released this morning. It is quite a strong set of results. Turnover increased by 9%, and as you mentioned, our profits grew by an even stronger 14%. And then if you look at some of the operational segments, retail turnover, that growing by double digits, distribution turnover also growing by about low single digits, and that was aided by a more robust performance within the second half. And we are still seeing the company continue to deliver results, and this is despite a constrained consumer environment, also speaking to the resilience of their business model. And if you're looking at the reaction for markets certainly pleased with the results and rewarding the share price with a 4% gain so far.
And then Kumba Iron Ore, they came out with their 3-month ended September production and sales report. Production was up 3%, while their sales were up 2% compared to the same period last year. What are your thoughts on this particular stock? We know that, of course, commodities, especially hard commodities, have had quite a difficult time, what with China not having the best of times economically.
Yes, so we also saw the release of that third quarter update. As you mentioned, the production did fall about 3%. However, we are seeing improvements on a quarter-on-quarter basis, so production actually increased by a similar 3%. And also looking at the company, we do see some of the headwinds being the logistical constraints, particularly from a Transnet point of view, that is affecting the company's export volumes. And as you've mentioned, we're also seeing iron ore prices remaining under pressure due to a struggling Chinese economy. However, what was positive out of the update is that management maintained the guidance for the full year 2024, and markets also reacting positively to that update, with the share up about 1.7% so far today.
Excellent. Thank you so much, Lindile, for speaking to us. That was Lindile Malgas. He's an investment strategist at ABSA.